Today, we're diving into the tax benefits of owning rental property. It's a true game changer for wealth building. Imagine generating passive income and legally keeping more of it by paying less in taxes every year. This is a revelation for many. For too long, I felt like I was just handing over a huge chunk of my earnings, especially from side ventures. But learning to transform your properties into powerful, legitimate tax-saving machines empowers you to keep more cash and grow long-term wealth like a seasoned investor. These aren't just strategies for the ultra-rich. Whether you have one rental or a portfolio, understanding these advantages can dramatically reduce your taxable income. Get ready to uncover these secrets. We'll delve into powerful tools like depreciation, deductible expenses, and even advanced techniques such as the 1031 exchange. You'll learn exactly how to leverage them. Let's get started. One of the biggest eye-openers for me was learning about depreciation. Think about it. Your property might be increasing in value, but the IRS allows you to deduct a portion of its cost each year, typically over 27.5 years for residential real estate. This creates thousands of dollars in paper losses that directly reduce your taxable income, all without actually affecting your cash flow. It's like magic, but totally legal. And that's just the start. You can deduct nearly every cost tied to running your rental business. Things like mortgage interest, property taxes, insurance, repairs, management fees, and even your travel expenses if you're checking on your property. Every single dollar spent operating your property can lower your tax bill. My friend Mark, who's been slowly building his portfolio, was blown away when he saw how much he could save just by keeping clean records and knowing these deductions. It really transforms how you view your investments. Beyond the foundational deductions, the world of real estate investing offers even more powerful strategies to maximize your tax savings and accelerate wealth accumulation. Take the 1031 exchange, for instance. This allows you to defer capital gains taxes by rolling your profits from one property into another, effectively growing your portfolio faster and keeping your money actively working for you. Also, if you meet the criteria as a real estate professional, or if your income is below specific limits, your rental property losses can actually offset other income sources, like your salary or business profits. And for the truly advanced, techniques like cost segregation and bonus depreciation let you accelerate deductions significantly, sometimes allowing you to write off a large percentage of a property's value in the first year. These aren't just minor tweaks. Mastering these truly transforms your properties into powerful wealth engines, giving you immense control over your financial future. We've just explored some truly powerful advanced strategies, but let's circle back to what makes them all possible: a rock-solid understanding and meticulous tracking of your foundational deductions. Think of depreciation, mortgage interest, and everyday operating expenses not just as small savings, but as the essential bedrock upon which all those sophisticated techniques like 1031 exchanges are built. Every receipt, every categorized expense strengthens this foundation. It's the disciplined practice that empowers you to fully leverage more complex strategies and truly optimize your property's cash flow for long-term wealth. Many investors overlook this critical step, but mastering these fundamentals is the absolute prerequisite for accelerating your financial journey and redefining your investment trajectory. Once you've got this robust system in place, you're perfectly positioned to explore every powerful tool available to you. Click the link to get tax strategies for